Morning all. How are we all doing? Morning Stevie, morning JJ, morning Ladder, morning David, morning Diamond. Happy Monday. Big week. Big week. Big week. Probably the biggest week of the year, I think. Going to be a pretty interesting week this week, to say the least. I just wanted to quickly see what was happening with the pound this morning. We have positive GDP. It's having a little bit of a push at the open, so it's not dramatic, but is having a bit of a reaction. So cool. Sorry, let me just get over to. Whoa, I'm not on the wrong thing. Hang on. Oh, so what advert are we going to get this morning? Ah, Hero Wars again. Let's get rid of that. Okay. Right. So, pass the funded account. So this is the new live funded account. I've taken a trade on it this morning just to put a trade in, basically, just to check it was working, because the EA is running on this live account now, live funded account. I passed it this morning. I passed it this morning because I had to do 5 days on the second stage evaluation, obviously. So I just took a quick 0.1% risk trade this morning, closed it out and got the live login credentials straight away, as usual with my Forex funds. Fastest funding in the universe, literally happens within 5 minutes. It's brilliant. So yeah, so this is another 50k funded, which I'm going to run the range breakout EA on. At the moment, hang on. 5 minutes to the open. I've just realized I haven't changed the risk parameters. Yeah, let's go a bit conservative to start with, shall we? 250. I've done a load of back testing over the weekend, and I still haven't decided on my set file yet. I've got this EA is driving me nuts. There's so much potential in it for other entries and stuff, and I just I'm struggling to find a set file. Let's check the magic, so same 997. I'm just struggling with development on it. I just keep thinking of new things. I think, oh my god, that'd be amazing if we did that. And I'm trying to draw a line under to get it launched. It's on the marketplace. I've got all the descriptions done. I've got the screenshots done a little logo thing for it, which you got to do. But I haven't written up the strategy that it's designed to trade, which I'm writing a blog post for now, because there's no point in launching a product unless you teach people what it's actually doing. I don't believe in these EAs where you just buy an EA and it takes trades and you've got no idea why it's taking trades, what it's doing. People need to know what something is doing on their account if they're going to put anything on a live account. You've got to know the logic behind it. Otherwise, you're just, I don't know, mad. Yeah, so I'm writing a blog post at the moment which details the entire opening range breakout strategy, the theory behind it, etc., etc. I haven't told anybody the live room's live yet. Hang on, sorry, one sec. God, I'm not with it this morning. I've had to roll forward all my futures contracts this morning. Sorry, just get the link. Wrong one. Link. There we go. Link. Jigsaw. The only thing I don't like about Jigsaw for futures software I use is it doesn't automatically roll forward your contracts. So you have to open up every chart. Well, you have to go into every chart and every ladder and actually roll the contract forward in the futures market, which is a pain in the backside. And I've had to do that this morning. And then obviously this account, I opened up this account and all the dashboards were broken because it didn't have any data, because it's a live, because I've switched from the demo server to the live server with my Forex funds, obviously. Got brand new data in, no data. So I had to go into every H1 and H4 time frame and daily and weekly and monthly time frame and make sure it loaded all the data in. So I'm totally behind on everything this morning. So forgive me for being a bit skittish. It's unusual for me, isn't it? So yeah, so the EA is going to run on this, but there's so many more settings I want to get done. So I'm going to finish that blog post off today, which details the full logic behind it. I haven't got any set files published either, so I want to put some set files up so that people can have some set files to start with. But I would encourage you to do your own testing anyway with it. But David, did you pass any funded account by position trading using the EA, or is it majority you're trading scalping indices? All my funded accounts are all past scalping, and a little bit of swing trading on 4 hour, but not position trading. No, I did a position trade account which I traded live in here, and I nearly passed. I very, very, very nearly passed it, but I just got into one trade which just took it too far and couldn't pass. The trouble with, and this is the problem with all trading, regardless of whether it's position trading, scalping, swinging, whatever. You're going to have, position trading. I have months where it just does that, and I get very, very little drawdown. I might go into 2 or 3% drawdown for the whole month, and it's just absolutely fine. Those months you'll pass, no problem at all. Then you have months where it's mixed, where you have 1 or 2 trades that goes into a bit of a squeeze for a couple of weeks and then it comes back. Those ones you may well pass. Then you'll have ones where it just goes into a squeeze on something and you'll hit your daily drawdown limit and you'll fail. And there's nothing you can do about it in position trading. But it's the same as any strategy. You have a brilliant scalping strategy where your P&L normally looks like that. If you do your evaluation there, you'll fail. If you do your evaluation there, you'll pass. There's nothing, there's no trader in the universe that has control over whether they're going to pass or fail an evaluation. It's completely dependent on the market, because you take 10 trades today and they're all winners. You take 10 trades tomorrow, they're all losers. Today you'll pass, tomorrow you fail. Not in your control, is it? Strategy is a strategy. As long as it's got a long-term edge, you just got to hope that you can get through the evaluation. But this account was passed with the new range breakout EA, the one that's going to be trading this in 4 minutes. It will take its first trade on this live account. Morning, Andy. Back from holiday in South America. Need to make some money to pay for it. Yeah. Always good. So while we're waiting for the market to open, the first 5-minute candle get in. I've had some really interesting settings on the EA over the weekend, by the way. Some very high profit factors on this one. It was this one. Look, so this is a test I did on my Axie account. 1.96 profit factor on this test, which was amazing. I haven't tested it. I need to do a bit more testing on it. But this is only taking the first 5-minute range break, which is interesting. It's got ignore the numbers there because Axie puts an extra digit. So this is a 200-point stop on the DAX with a 100-point trailer. So basically, you can kind of ignore that because you're basically trading a 100-point trailer. So it's literally put it on the chart, pending order at the high and the low of the 5-minute candle with a 100-point trailer. 1.96 profit factor, huge. I need to test this. That's on my list to do today, is to do more testing on that. That looks like a goodie. Looking forward to the new EA. I enjoy position trading. Yeah, you can't. Position trading is not for funded accounts. It's just not. The limitations are there for risk, which you can understand, and they need to keep their risk tight, which is fine. But you're not going to be able to pass an evaluation position trading because you can. That's a lie. You can pass it position trading. The problem with it is, I think, is the 30-day rule. So you've got 30 days to pass stage 1. If you get into some positions which go into that for 2 weeks and tie up your exposure for 2 weeks, and then they come into profit, there's 2 weeks there you haven't been able to take exposure on other instruments. So you're going to fall foul of the 30-day rule. So you'll have to retake it. I don't know. There's just too many. hurdles in the way. It's great for scalping and for swings. I'm starting a new swing strategy as well, which is going to be based on smash bars, fundamental smash bars, fundamental directional bias with smash bar entries. Smash bars, go and look it up. Larry Williams' strategy. I'm going to be trading that on 4-hour charts as well, which is something else I'm developing in EA just to back test, but I can't back test it for fundamentals. I just want to get a high strike rate on it and check what the drawdown is. But there's another strategy I'm going to add in, which I used on my S&P account, and I think it will work really well for prop because it hasn't got it doesn't use stops. So I'm probably going to introduce a stop as well on it, probably 1.5 ADR or 2 ADR stop on it, but that's something for the new year. I was just going to cover the news before this candle closed, but I'm not going to have time now. Let's cover the overnight news. So overnight news, we had GDP this morning, which was positive. So the GDP figures came out at 0.5 instead of 0.4. We were negative 0.6. So big change on GDP for the UK. Swung back positive, first time since August, which is encouraging. Still not good. So it's only month on month. Don't forget, this isn't the big year-on-year figure, but the month on month is how we're getting on. So it's positive, which is good. But I don't think it's really going to help the pound. All pound pairs are kind of neutral to weak bias at the moment. So we'll see what difference that makes. Again, there's another thing I'm looking at for scorecarding as well, which I've got a lot planned for the new year to change a lot of stuff that I do. Just want to get more organized, really. It's one of my main problems. So that's the overnight. Apart from overnight, we had some manufacturing and etc. GDP estimate for the year is going to go to 1.5, which from 1.4, so there's not a lot of change really on that. Other overnight news, there wasn't really a lot. We had PPIs for Japan, which came out as positive. Again, good for Japan. This bullish yen, all looking good. More stuff about the pipeline. Gas that was held up in tankers is now being allowed through, some of it. So there's still a load of wranglings going on about commodities. Apart from that, there's nothing over the weekend. I don't know what this is. I read this and I was like, what? TC is said to be planning a partial Keystone restart beginning December the 10th. I haven't even got a clue what that means. It's important, whatever it is. I guess it's something to do with crypto. I've no idea what a partial Keystone is, and I've no idea who TC are. So we'll have a look at the news in a sec. Let's just watch market open. So long one DAX. It's a big out the gates run. So just quickly looking at the DAX. It's reordered all my instruments because it's a new account. There. So DAX basically, we had another indecision day, another rotational day on Friday. This is our third basically in a row now. Market obviously is not interested in any directional bias until this week's done. We'll have a look at the news, but this is all a byproduct of we haven't got a clue where we're going next week, so we will just go nowhere. Today, I suspect, may well be the same because obviously we've got all the rates coming out this week. So pushes today, you want to be watching that yesterday's high and low especially, and obviously previous days highs and lows as well. So these areas down here and up there, if we get a push up into those today, they will be lovely shorts or longs if we can get there. I suspect we will come back into a holding pattern somewhere around this area by end of day, but where we go until then, nobody knows. So no one's going anywhere obviously at the moment until we get the news this week. So that's just opened along, but we'll see what happens with that. So news this week. So huge news week, as we know. We've got all the GDPs, the CPIs, all the interest rates. We've got retail sales. I mean, it's basically, you name it, it's coming out this week. We've got 4 days of utter chaos ahead. So futures accounts, by the way, I've just obviously my futures account. That's the point. I wanted to take a trade on that this morning. Just quickly take a long on. Oh, not free. Oh, take the trailer off as well. Me trading on Monday. On Friday rather. I was getting aggressive on Friday afternoon. So I'm just going to go pending long on Nasdaq. I think I'll take one on the S&P as well. So yeah, so this basically this week is all news based. So today, obviously, we've had GDP figures for the pound. We've got Macklem speaking a little bit later on as well. What was I just going to say about futures? Oh yeah, futures. If you've that Take Profit Trader funded account that I've got, there's extra rules when you're funded. There's 2 extra rules, just to let you know. There is an index high and low, which is 7%, which you need to be aware of. So if a index trades, a futures contract index trades up or down 7% in a day, there is an automatic failsafe kicking which stops activity. So when you're getting close to that, you need to be aware of that, because they will close. You will lose your account if you take a trade, or if you're in a position or you have pending orders placed when we hit these key cutoff areas in the indexes. You'll lose your account. So that's one important rule. Take Profit Trader, which I read the contract this weekend in details just to check all of this. The other thing is you are not allowed to trade FOMC statement. You can trade the press conference, but you can't trade the statement. You're not allowed to trade CPI. And you are not allowed to trade, what's the other one? I need to know this. FOMC, CPI, and GDP. Oh my God. I knew this morning. Yeah, it's GDP figures, sure. I'm just thinking it's anyway. But there's 3 news events you're not allowed to trade. Oh, no, sorry, no, it's not. It's non-farm payroll, NFP. Right, so you cannot be in a position or have pending orders open 1 minute before or after those. So just those are the only 2 rules that are different on Take Profit Trader. If you're using futures, obviously. So if you're not using futures, doesn't matter. A little bit whippy this morning. A lot whippy this morning, inside the opening range, but looks bullish. So this week, we've got the claimant count tomorrow for the pound as well, which again might give it a little bit of it won't be a big spike or anything, but it will give it a direction for the morning. So positive, we should have a little bit probably pound movement this morning, and obviously depending on what happens there, we might get a positive or negative move tomorrow morning as well. We've got Bailey speaking at 11 o'clock as well. He'll be laying out potentially what impacts the CPI figures are going to have on the rates. So Wednesday's CPI, Thursday's rates. So we've got Bailey speaking tomorrow. So there might be some clues coming in his speech tomorrow about what he's going to be doing and what's going to be happening. So the market will be watching out for that. So we might get some activity off of that this morning, tomorrow. Morning, Jacob. US dollar CPI. So inflation figures coming out for the US tomorrow afternoon, an hour ahead of market open. We've got low speaking then tomorrow evening. Then we go into the inflation figures for the UK, which come out Wednesday morning, 7 o'clock. So pounds this week, we've had the GDP this morning, we've got claimants, then we've got CPI, and obviously then we go into normal. Then we've got retail on Thursday. So AM ahead of market open, we've got 4 events for the pound this week. So then we go into the CPI figures, obviously, for the pound. Then in the evening, we've got FOMC. So that's the new Fed rate. There's wranglings about whether or not they're actually going to increase it. It would be a massive shock to the market if they didn't. But I keep seeing these odd reports of there's a few dovish statements have come out recently, and that might not happen. But I don't know. We'll have to wait and see. But obviously FOMC is massive, and then the press conference is just as massive. We tend to get a lot more movement actually in the press conference afterwards, and that's where the direction really kicks in or unwinds. So yeah, big one for the Wednesday evening, obviously. And then 9:45, we've got the GDP figures. So just before market close on Wednesday, we've got GDP for the New Zealand dollar. Then we wake up in the morning to the unemployment figures for the Aussie. Then we've got the Swiss rates, 8:30, just after market open. Then the SMB press conference at 9. Then we've got the pound rates at 12 o'clock. Then we've got the euro rates at 1:15. Then we've got retail sales for the US dollar. And we've got the ECB press conference just ahead of the New York Open on Thursday. So, you know, literally from really 1:30 tomorrow afternoon all the way through until Friday. It's just every few hours something huge is hitting the market, which can potentially fundamentally shift direction, the opposite way. We just don't know what's going to happen. So after that's all over, then we go into retail sales on Friday morning for the pound. We've got the PMI figures for the euro in the morning. We've got the PMI figures a little bit later for the pound, and then we've got the PMI figures in the afternoon. And then it's Christmas. That's it. We're over. Done. So that next week, there's, we've got CPI coming out for the CAD, but apart from that, and depending on what the BHJ do, but there's nothing much else. That's it. We're into Christmas then. So yeah, this week, absolutely everything. They will be looking to get flat as they possibly can this week. The funds. So the COT report starts to wane as they pull out basically money, go flat as they can, get their targets hit. There'll be a lot of banks and institutions looking to hit targets. We've got end of quarter, end of month, and end of year targets all needing to be hit this week. And we've got all the news we could possibly want to make that happen. So huge potential on every single one of these news events that's coming out. You can be sitting here, just if you want to trade this high risk this week, some of these could obviously move the market massively. So, I mean, if we just look at like CPI tomorrow for the US dollar at 1:30, just pull up a US dollar pair. It's not really going to matter which one it is. I mean, if you're going to trade the US dollar, probably US dollar CAD at the moment because the CAD's so weak. Get a position started ahead of the news and pick a direction. Or go with a straddle, pending order. News, you could make an absolute killing and pay for Christmas this week. That's what I'm going to be doing. I should be trying to scalp every single one of these. Low risk, 0.25%. But I'll be, scalping the whole lot this week. Just and I don't have a directional bias on anything. Because obviously everything is going to be, the directional bias is going to be decided by all of this news. This is what it's doing. It's going to be deciding where we're going for the next quarter, months to a quarter. So, straddling news is quite often a very good strategy around very, very, very high impact news like this. You will get slipped. But, you only need one or two of these to take off. Stopped out on the long and flip short on the DAX. So yeah, that's what I'll be looking at this week, is trying to get some of these in. Ideally, what I like to do is get a position started ahead of the news, so that you can ideally try and get to break even on it. But it's obviously a lot more tricky to do. So yeah, lots of opportunities this week and lots of mayhem. But we'll have a look through all the pairs today. There's nothing has hit ADR. We've got nothing on the weeklies, obviously. The only monthly we've got hit is the New Zealand dollar CAD at the moment, which is stretched to hell. Nothing's extended on the RSIs. We had a fairly flat Friday, so there's nothing really extended to look at there. So we'll whiz through all the pairs and have a look through everything today. Let's just see where DAX is heading. Yeah, we are going south. Very nice. But bear me 1 second, just on my tablet. Where's my mouse gone? The hell? Mouse pointer's vanished. Oh my god. I hate doing touch screen. How am I going to change chart? I'm just going to turn that off and on again. Right, so if anybody's got anything they want to look at in detail, let me know. But I'm going to whiz through all the pairs this morning and just see where we are with everything. But as I say, anything we look at this morning, I've got no mouse. I have to restart Windows. I can't close any applications down. What's what is it? Is it all is it Control F4 to close an application? I can never remember. No, that's volume. Alt F4. No, that's volume as well. Oh my god. Let's do a touch. Sorry, bear with me a sec. Restart. Right. Alt F4. Yeah, I thought it was. It's not. It's I've got Microsoft Surface, and Alt F4 and Control F4 do the same thing, which is volume. Anyway, I've restarted it. Plug it in again. It's already plugged in. I can't remember what the ads are set at on this. Anyway, I'll just take that one short. Right, so let's start on the indices. So, oops. So obviously this week, the indices are all going to be driven by what happens with the US dollar a lot this week. So every day we've got potential news events coming, which is going to drive the US up or the indices up or down. So starting with the CPI figures, obviously hour ahead of market open, we're going to get a lot of volatility on Tuesday. Then Wednesday, I suspect we will go into a rotation day, so it'd be good for trading range highs and lows ahead of FOMC in the evening. And then we are looking euro. The DAX will be affected at 115. And then in the afternoon, we've got retail, which will affect the US indices again. And then on the Friday, we've got the PMI figures, and we've got the PMI figures for the euro. So the DAX again affected in the morning, and then in the afternoon we've got the US indices. So every day this week something is going to be driving the indices up or down. So you can't really tell where they're going to go until we know what is going to be happening with those figures. But we had that range low that we were looking at, which got broken last week, and since they broke it, they've really done absolutely nothing with it. So this massive propulsion gap on the daily is where I'm anticipating us coming down to on the DAX. Don't forget the euro is bullish at the moment, very hawkish with the euro. So if the euro is going to move up, we will obviously see DAX starting to come down a little. We are still in the bear market. We are still going into or in recession. So it should all be bearish. And obviously the market, we just had the reversal alert on the daily, and we got a nice end pattern reversal, and it's just starting to roll over now. But I don't really think we're going to get any real movement until FOMC is out of the way, which is on Wednesday evening. So again, today, tomorrow, potentially we could be looking at rotations. So I'll be paying close attention to highs and lows of previous days for potential mean reversion plays. I've still got no mouse. What's going on? My tablet's broke. Either that or it's invisible. Right, that's annoying. You can't do anything without a mouse on this tablet. Right, anyway, I'll do that later. I just wanted to have that up. I can't actually launch any applications. It is touchscreen on Microsoft Surface, obviously, but trying to do anything touchscreen like that. How do I do that? Touchscreen. I can't see any of the symbols because it's all. Oh, you can just. Yeah, you can do that. Learning every day. Yeah, sorry, DAX. Looking for shorts. When we get down into here, that's when I'm going to be interested in where we go from there. I can't believe that we're out of the bear market yet at all. So the DAX is obviously doing a lot better than the rest of the indices, as is the Dow. But I can't believe we're out of the bear market. So I'm looking for literally new leg down below these lows over the first quarter. So we will see. NASDAQ Friday, similar sort of thing. We had a bearish move, a little bit more bearish than the DAX. Obviously, we had the nice push down. Again, we found support, couldn't get through. Yeah, so we just literally, we're stuck. Same thing, massive propulsion gap. Buyers are propping up at the moment. Every time we try and get down, the buyers are stepping in. So again, FOMC this week. Positive for the US, drive down the indices. Negative for the US, drive up the indices. We need to wait and see. Can't make any decisions on anything, but we are in a bear market, and there's no reason why we shouldn't continue to be so. So obviously that pre-COVID level, which all the institutions were calling to be hit on the NASDAQ, we're still miles away. So there is plenty of room to go down next year. So we'll see what happens. But we you know, for the last 2 weeks, as we know, we've been in an accumulation. We're actually a little bit, if you look at it, we're in an expanding sort of pattern ever so slightly at the moment, where we're just kind of starting to turn into a loudspeaker horn and expanding volatility, but we're not actually getting anywhere. So FOMC, obviously, on Wednesday, this thing's either going to look like that or it's going to look like that. So we will see. But obviously, I'm still bearish overall from a fundamental point of view. Everything's going wrong, so markets should be coming down still. S&P is the same. We've got that lovely trend line on the S&P that's being very nicely respected. Not that I use trend lines, but this is one that's actually holding up. It's very rare you see that happen. Very rare, but it has. So there you go. There's your one instance that everybody in the universe that uses trend lines and sells courses on trend lines, that's the screenshot you'll be seeing for the next year. Look how good they are. So yeah, market structure is obviously still massively bearish. And if that trend line is going to hold, that's where we're going. So all the same. Dow is very much looking the same as the DAX. Much smaller market, obviously 30 stocks. DAX has got 40. Forget that and all that. And we're pushing up. So we've actually made a new high. So we are now potentially looking at a bull market, which I don't think we are. It's just that the Dow with the smaller stocks in it, and these smaller indices have got much better performing stocks. So much more stable companies, bigger, more stable. So they do tend to outperform, as we know. They're much slower movers. So we've got a new high there, but equally we have just got that reversal alert gone in. We're sitting back down. So looking for continuation short, but obviously completely dependent on what happens with the US this week. Oil still coming down. So oil's an absolute collapse at the moment. Huge short. I don't understand why. We've got expanding demand, reduced supply, and every other commodity in the world, if you said to anybody that's what we've got, they'd be buying the hell out of it. Interestingly, cot positioning on it. I was just looking at cot positioning on it earlier, and now I've lost it. Cot positioning on oil is 77% long. 77% of the market participants, i.e. banks and institutions, are long oil. 77%. So either they have got it really, really wrong, as we have, and they don't understand what the hell's going on, or they are buying the hell out of this, knowing full well this thing's going $90 to $100 a barrel in the next 3 months, which is what the institutions are calling for. But when the institutions are sitting there 77% long, and they have been for weeks, sitting like that, you've got to ask yourself what the hell's going on. This isn't driven by rational moves at the moment. Where everything that's going on with Russia and everything, this should be coming down, and it's not. That's just pushed back down. I just want to watch where we are. Just going to draw some levels in. That's the new spike. So these are the lows, basically. I'm just going to move that one up because that's a new spike, really. So I'm just going to move up to there. So previous day's low. Sorry, well, that's Friday's low, previous day's low, day before's low. So this this section here is where I'm looking to buy if we get down there. Obviously, at the moment, all we're doing is we're rejecting this level. So may not even get there. I'll adjust these lines just so that they make sense. There we go. I'm going to stop out break even on that second position by the looks of it. So yeah, oil. Guess as good as mine. Really glad I'm out of it. I don't understand why it's still coming down. The problem is, where is it going? The moment that low there, if we scale out a little bit more, we've got this low here, which is kind of it's the same level basically, roughly. And nothing's ever to the pip. It's roughly this support and resistance level. We've got a lovely area of balance. We sat in for ages around this level as well. So there's a lot going for this level, which is $62 a barrel. So somewhere around the 62 to 63 a barrel, I think, is probably the low if this thing doesn't turn around and run the hills this week. So this week, obviously, there's a lot of news coming out, and all of that news will potentially affect the price of oil because it's all priced in dollars. So what happens with the dollar will affect oil pricing as well. So there's lots of things going into the pie, obviously, with fundamentals. This will get affected just as much as anything else. And we know how fast this thing moves. If this thing wants to put in a sharp retracement, a new market structure by the end of this week, it will do exactly that. So it's, I hate to talk about things being cheap and expensive because that's not the way the market works. But the institutions are certainly long. So the fact that they're long, and we are down to this $70 a barrel, which is, we were talking about, it's not going to get below 80. We were also talking it's not going to get below 90, weren't we? Now we're talking it's not going to get below 70, and we're talking about 60 being the potential target. So, don't know. But like anything, it's risk reward based trade. So get in when we do run for the $90 to $100 a barrel, which is what people like Goldman Sachs are calling for in the first quarter. Right now is exactly where they want to be buying it up, isn't it? And they certainly seem to be long on it at the moment. So like it as a long. It's just, I wouldn't want to position trade this unless you are factoring in plenty of room down to here. Jeremy Hunt's just said the economy is likely to get worse before it's to get better. Good one. Yeah, let's have some positive news and then trample all over it. Good one, Hunt. I don't know whether inflation has peaked or not. What's that just done to the pound? paying too much attention at the moment. But anyway, so yeah, oil. If you like it as a long, I mean, I love it as a long. We had a really nice retracement back up into resistance. And this morning, obviously, all we've done is fallen out of bed again. So if we get back down to yesterday's low, I mean, they've got this propulsion gap here as well, which you might find some buyers in. So this is a good area to watch for an entry this morning, if not a second entry there. If yesterday's low breaks again today, you just got to look at it on the daily chart and think, right, well, if yesterday's low breaks, and we're going to get another down day, there's just no reason why we shouldn't be waiting. And we could well get down to there on FOMC as a spike. And that's where you want to be buying it up at the 62, somewhere between 62 to 63 a barrel. But I don't know. Tricky one, isn't it, oil, at the minute? It's just not paying any attention to fundamentals. Stopped out break even. I've got a second sell on as well. It's annoying. God, this thing's under schizophrenic run this morning, isn't it? This is the problem with this EA. It's a trend breakout EA. And obviously, when you have days on end where you don't get trends, it doesn't perform well. There's nothing much you can do about it. But when we get those big trendy days, as we saw, it'll do 2 or 3 grand in a day. So it's just one of those things you just have to sit through these choppy, nasty opens, which we're getting this morning. Right, so that's oil. Gold. Interestingly, I was looking over the COT report at the weekend. Gold is a long at the moment. Again, the smart money is sitting there, or so-called smart money is sitting there long on gold. We've got 68% longs on gold. So again, this is just a cross with the US dollar. I personally like this as a short. The current situation we've had, obviously, since February with the war, gold has been coming down dramatically. Again, another commodity you would expect to go the other way. We have a massive store of gold locked up in Russia. There was an export ban on gold from Russia. They have an awful lot of it. And as we can't get hold of that supply, you have supply problems. Supply problems cause increases in prices. What's gold done? Tanked. Same as oil. It's all kind of doing the opposite of what the fundamentals typically on a normal year would say to do. So potentially looking for that to continue down. It's going to depend on what happens with the US dollar. If we get US dollar strength, obviously, gold's going to come down. If we get US dollar weakness, gold's going to go up. So it depends what they do with the rates. If the Fed come out and decide, actually, we're not going to go 4.5, we're going to stay where we are, it's going to tank like a rock. So we'll see what happens. We can't really make any decisions on anything, as I say, until we've got FOMC out the way. But I think personally we'll get a drop on this over the coming weeks. We'll say over the coming weeks in beginning of the new year. So it looks good for potential shorts long term. But again, we need to wait and get confirmation on FOMC. So Aussies. So looking at the news next week, this week for the Australasian pairs, we've got low speaking on Tuesday. We've got GDP figures for the Aussie, for the New Zealand on Wednesday. Apart from that, that's it for the Australasian zone. So we've not really got anything. We've got the GDP figures for the New Zealand dollar. That's forecast to come down. So again, New Zealand dollar's on an absolute mission at the moment, as we know. So that thing could keep going. So looking at the Aussie pairs, CAD's obviously massively weak at the moment. So this has been pushing like crazy. There's a huge gap down this morning, isn't there? Oh, so huge. Pretty much filled it, isn't it? Well, filled it straight away. So yeah, Aussie dollar CAD, that's been going absolutely crazy, as we know. Very nicely extended on the 4 hour. We just came out of a 4 hour extension on that. We just started to roll over at the highs. We've got no more Aussie news. And obviously last week we had the Aussie CPI figures, which were negative. So CPI inflation starting to drop. Good for economy, quite often bad for currency initially. But obviously as it drops and drops and drops and drops, that becomes good for the currency because it becomes more investable, and then obviously everything goes. The problem with Aussie dollar is obviously they do massive exports to China. China's been locked down, so there's been no exports from Aussie, which has brought their GDP down. Everything's coming down because they can't deal with their closest trade partner. So that's been affecting the Aussie negatively, but that is all it just all looks like it's ever so slightly starting to roll over slowly at the moment. So we'll see. This week, obviously, we'll get a lot of movement on all the pairs, all instruments. So as money is pulled out of the Aussie and pumped into the CAD or vice versa, when the news is all released, then we'll get a lot of movement on this as well. So all the Aussie pairs at the moment, they're still bearish at the minute. Until obviously we see something changing on that. So kind of neutral to weak at the moment, but we need to see what happens with everything else. Don't forget, we've had some negative-ish news on the Aussie, but it didn't really do a lot. If you look at the Aussie New Zealand, we've held up very, very, very well. New Zealand dollar is massively strong. We held up through the negative news. We had the reverse alert into it. We held through it, and it's not going anywhere. It's if you look at the Aussie New Zealand, this is the prime one because this is the one that I'm in at the moment. It's been basically smashed, recover, smashed, recover, smashed, not recover, smashed. It's holding. So this is the first reversal alert we've had that looks like it's potentially going to hold for a while. So we are definitely due a pullback. I wouldn't be surprised this week to see us back up at that resistance, which would be lovely because it means I'll be out and flat for the Christmas period. But yeah, all the Aussies, we've got some decent holding sideways or positive movement across the board now. So we just need to see that follow through this week. And obviously, as money is pulled out of other things, and pushed into pushed around basically, as it does when we get news events. We should see hopefully some more money coming in for the Aussie pairs, for the New Zealand and the Aussie. Potentially for New Zealand, but obviously New Zealand, I think the GDP figures are going to affect that one. If we get decent GDP, bigger than expected, I just get a feeling that's unfortunately going to continue to push. But I'm in New Zealand dollar CAD. So, the trouble at the moment is obviously, as you can see, we're very CAD light on the news. So I'm kind of hoping for negative news on New Zealand. But all these Aussies, basically, I kind of like them for sort of neutral to longish now. We've started rolling over. So we will see what happens. But sideways basically at the moment on everything. So none of these at the minute. There's not really any opportunities. Aussie CAD potentially for a short. But again, you just got to be a bit careful with this one. If you look at the pullbacks we've had, they're not deep. We've got a very big, strong CAD. If oil finds a bottom as well, CAD will power up massively, which will obviously bring this down. So it's very, very tricky. All these Aussies are very tricky at the moment. They're all very much reliant on export. And, when your biggest trade partner's locked down and your own economy is not doing very well, it all starts to fall out of bed. And that's what we've seen with the Aussies. So starting to roll over. But Aussies, I'm not really interested. I say I'm not really interested in anything this week or this side of Christmas because, there's nothing you can really get into because it's all going to go flat. So what's that DAX doing? Oh, my God. Look at that. Back straight up to the highs. So we didn't even get the rotation down. We just got basically down to that low, ignoring the huge news spike there. And now we're rejecting the highs again. Horrible day. I'm tempted actually just to put this account on hold as well. this side of Christmas because it's just going to be murder, I think, this week. But I don't know. There's also a lot of opportunities. Very difficult, isn't it? So it looks like another good short there. 30-point stop. I'm going to try that, I shouldn't really take manuals, but I am. I'm going to go one short under the low. Try and get an extra position back on. See if it works. Good rejection, basically. So we rejected the highs when we pushed up into them. We just got back up there and rejected the highs again. So we are either going to double top and retest these lows, or it's going to go long, which is fine. But I kind of fancy it down to the lows. So let's try that. That's a trade this morning. Right, so that's the Aussies. Really difficult to make decisions on anything to do with obviously those at the moment, with the news that's coming out this week. But slightly more bullish than normal. We've got low speaking, haven't we? Yeah. So low is speaking 10:30 on Tuesday, tomorrow. So again, hawkish comments, I suspect, which will be bullish for the Aussie. I would imagine he's going to be talking about China opening up and sort of expanding their exports, etc., and talking bullish. So I would imagine we'll get some positive movement, but obviously that's can all be negated very, very easily by everything else that's going on this week. CAD is a huge short at the minute, as we know. So not very good. Just get rid of those blue dots. So yeah, huge short on the CAD at the moment. They're looking to put their interest rates up to 1%. So if we get a hit on the Swissy at 1%, I suspect that depending on what happens with oil and what happens with the US dollar, could go either way. So either way, I don't really hold out too much hope for the CAD Swiss at the moment. It's a sell, and it should remain a sell. So I'll be looking for pullbacks on this to try and get some short positions on. The Swiss franc has every opportunity to go ballistic on Thursday. So we're expecting a 1% rise. Obviously, as we know with the Swissy, they pulled a fast one and did a 0.5% interest rate change, which was not expected, which obviously started the massive strength on the Swiss franc. Then they went up 0.25% from 0.25 to 0.5, and now they're going up 0.5%. So this is a much larger increase than the previous one. If they achieve that, and again, we never hear anything out of the SNB, they just don't put any hints out there. If we hear it, if we get that, we should see some strength in the Swiss franc. So CAD Swiss, for example, coming down. If we don't get that, then we will get some weakness in the Swissy. So I very much doubt they would go higher than that. I almost bet my mortgage on it, but unfortunately, you never know with the Swissy. So we got the press conference after, which will be talking about basically why they've done that and what their plans are for the future. And apart from that SNB press conference, we get 1 or 2 opportunities a month to get any news out of the Swissy. So be very important. We'll get whatever direction this thing takes off in tomorrow. I suspect that's where we want to be positioned on the Swiss moving forward into the new year. So interesting to see what happens with that. The CAD obviously is very weak at the moment, as we can see. It's still coming down. The market looks like it's still factoring in more bullishness on the Swiss franc ahead of the news. So yeah, keep going short on it, but try to find an entry, a way to get in short on this thing is not easy. It's just been falling out of bed, and it hasn't actually recovered at all. Any yesterday high sweeps that you can find I mean, they're just, you know, it's got nothing, is it? That's the only time it's taken out yesterday's high. Did there as well. And we have there. Yeah, so it's had a couple of times it's managed to get above, but those are your shorts, and that's basically the way to continue trading that thing at the moment if you can get the entries. CAD yen. So all the yen pairs, we're anticipating some strength coming through on at the moment. So looking for longs on a few of them. Swissy yen will be a great one. New Zealand yen at the moment is a great long. The rest of them are kind of neutral at the moment. But any kind of strength in the US dollar is obviously going to drive the US dollar yen up as well. And the closer you get to that 150 level, the more the Bank of Japan are going to start to muck about and intervene again. So with all the yen pairs, I would want to be looking at entering short on anything against the yen. But you need a pullback, obviously. And at the moment, this one's just obviously going sideways, very, very weak. The Swiss yen, that's a nice pullback. But again, Swissy could well strengthen up on the news. But again, we don't know anything until all these news events have come out. And then the week after this week, that's when we're going to find out what the BOJ's monetary policy is. So what their fiscal plans are moving forward, how they are going to deal with everything, and you know whether we should be looking bullish or bearish on the yen. So again, next week, it's all the week after next. Sorry, next week, actually, the week after this week, we've got the BOJ. So we're not going to know anything about the yen really until that week. And obviously that's the week before Christmas and nothing's going to happen anyway. So, you know, it's kind of all on hold really. Everything's starting to slow down, but I would be looking for short opportunities. Swiss yen is not the one I would be picking. So because the Swissy, I think, is going to strengthen up. The New Zealand dollar is very strong at the moment, we know. So for shorts against the yen, probably your best bets at the moment are the CAD or the Aussie, or the pound. So those are the best shorts at the minute. So looking at the euro, we're expecting to strengthen up as well. So if you get the yen being strong and the euro being strong, you're going to get a lot of this, you know, pretty much what you can see here. Yeah, we've got a strong euro, we've got a strong yen. Yen's had a little bit of an opportunity to power up, but yen, the euro's pushing back, so it's sideways movement. However, pound yen, obviously, depending on what news we get, we've had a bit of positive news on the pound this morning, but depending on what news we get with the rates, etc., obviously, if they're not good, then the yen will very, very quickly and easily take control of that one. New Zealand dollar yen is very, very strong. As we know, New Zealand is strong. That's one of the few that is actually taking advantage of it and beating the yen at the moment, and the US dollar yen. So this will obviously, the US dollar will beat anything regardless. So, you know, yen won't be able to stand in front of it if we get positive or negative US dollar movement. China just saying they're running out of medicine. So the main shorts, Aussie and pound, I would say, and CAD at the moment are your best shorts. But the CAD, obviously, you've got to be careful with the CAD, because if the US dollar gets very strong FOMC news and starts to rally off of that, the CAD will go with the US a lot of the time. And we've got that oil low, that bottom in oil has got to be coming up soon, which will bolster the CAD as well. So at the moment, it's a lovely short. But again, you know, this week, anything I say today is just totally irrelevant on Wednesday. So I don't even know why I'm bothering. Anyway, got to talk about something, haven't we? We need to be prepared for basically what's coming. So the best position to have right now is no position until the news is coming out. And then if you want to scalp it, scalp it. But position-wise, there's just no point. We just don't know what's going to happen this week. So euros, all hawkish on the euro at the moment. They're doing very well. data is pointing positive. Interest rates, GDP, everything's just getting better, basically, for the euro. So it's going to be a very slow grind because the euro's been in decline, obviously, for such a long time, as we know. We've had, the euro's just been absolutely trounced for ages, and it's starting to recover now. So it's one of those, beating the US dollar just shows you how strong it is. I mean, admittedly we've had a weak US, but even so, for that thing to smash through the US to the extent it has is good. We got down to parity, we rejected it. They tried to push through, and it's pulled back very, very nicely. So all these euro pairs, basically, I'd be looking for long opportunities on them, but you need to think about the other pair that you're trading against as well. So for the euro, you want to be looking something like the yen, if you're going to be buying it, potentially, because obviously the yen at the moment is just sideways, ever so slightly strong, but the euro obviously is a very decent amount of strength at the moment. The pound yen, euro pound, nice looking long opportunity. This is a very low ADR pair. So it takes a while for any positions to play out, but we are holding this low very, very, very nicely at the moment. And depending on what happens with the figures this week, obviously with interest rates, with CPI and everything for the pound and the euro, it's likely the euro is going to come out better and on top. So nice looking long opportunity from here. We've got a really nice base to work from down here as well. And obviously we've got very obvious range-bound targets to the upside. Not going to get anywhere near here. This is Liz Truss breaking the pound and Bailey bailing us out. So forget that. This is the range high. Yeah, that's just pretend that's not there. This is where we are. So right down here is exactly where you want to be buying, bottom of the range. So RSI extensions to the downside, hourlies. One there you had on Friday, started to play out. You had one on the previous week on Thursday. So any RSI extensions to the downside on this, any ADR hits to the downside, good long opportunities. So like that one as a long. Obviously at the moment, Euro CAD is a long based on the CAD being so weak. So, but don't forget the euro is still not massively strong. It's still struggling. As everybody is, you get decent positive figures. Interest rates have only gone up to like 10.6% instead of 10.9. Oh, that's brilliant. No, it's not, because we're at 10.6%. That's 8% higher than it should be. So, when we get positive news at the moment, don't forget it's positive news on the back of the worst possible news you can get. Interest rates are through the roof. Everything's going through the roof. And even if they are starting to get better figures, it doesn't mean it's necessarily going to be good for the currencies. So euro, I like a lot of longs on this at the moment. But as you can see, things like the odd, it's not going anywhere at the moment. The CAD, it's doing well against. Swissy, it never is. This is another low ADR pair. Euro and Swiss, obviously massive trade partners being in the same area, same as the euro pound. Euro New Zealand obviously coming down because the New Zealand dollar is massively strong, but that is starting to wane. The New Zealand dollar is weakening. So again, good opportunity for it to take advantage. So I like that as a long at the moment. And Euro US dollar, just can't make any decision on this. US dollar starting to strengthen up ahead of FOMC, which is the usual case. Ahead of the massive rate announcements, we either rally into them or either way, whichever, until we get there about a week before, and then we go into an accumulation, which is exactly what we're doing at the moment here. So waiting for that to happen. I suspect more likely that. But if we don't get positive reaction off of the rate announcement for the US, the market isn't impressed, this thing could well just continue to trend up. And we could easily totally undo this downtrend. Yeah. So don't forget, this is all to do with fundamentals. Yeah. if everything in the euro starts to become hawkish and they start getting on top of inflation and the recession isn't looking as bad and everything, and the US suddenly starts to spiral, that's not going to do anything but do that in reverse. So we've started all down to this week. And then obviously for the next 4 to 6 weeks, we'll know which way to go, won't we? But yeah, euro US dollar, difficult one. I just, I think I'm a little bit swayed on this bearish because I've been shorting it for 2 years and making so much out of it for 2 years as a short side. It's very difficult for me to hit the buy button on it. I'm automatically just thinking this is a pullback on a short, but got to pay attention to the fundamentals at the moment. The Eurozone is not doing as bad. But then again, neither is the US dollar. So hard, very, very hard to call. And again, we'll find out this week. All the pounds short. Just from a fundamental basis, again, we could come out with something nutty. You just don't know at the moment. The CPI figures could come out completely different. They could say, actually, we're going to go to 3.75 or something. You just don't know what's going to happen. So we just need to wait and see this week. But there's lots of news catalysts. So again, with all the pounds at the moment, what I'm looking for is slightly better or as expected figures and no market reaction. Not all, rather, a spike or whatever, it's news, it's going to go nuts. But after the news, no takeoff, so no massive movement in either direction. That would tell me that basically the pound is bearish. If you get news which should potentially increase a currency's value temporarily and you don't get it, it means that the market is just not impressed at all. So again, looking over the COT report this weekend, when you look at the pound, nearly 70% of the institutions are short on the pound. So they're not expecting a rally, and they're not expecting whatever they do with the rates to be good. And this is what I mean. Don't forget, the target for CPI for the UK is 2%. Right? If this comes out at 10.5, it's lower than what they're anticipating it to go down to. It's still 8.5 higher than the Bank of England want it to be. It's still massively bad news. So, even if we are getting better with our inflation numbers, which means we can take the pressure off of interest rates and protect the job market, which keeps the economy ticking over, it's still way, 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 way worse than we want it to be right now. So, but always bear that in mind. Figures that come out are red or green, they may be red or green, meaning they're better or worse than anticipated. But in the grand scheme of things, it doesn't mean it's necessarily going to be good or bad, which is why everybody gets confused with news. It's like, it's red, why didn't it go down? Well, it's because it's a 0.1% difference to what it should be and what they were expecting it to be. And in the grand scheme of things, that doesn't mean anything's going to change for 6 months. So the market will react and factor in what it thinks the market is going to do for the next 3 to 6 months. It's not thinking, what am I going to do for this news event? It's thinking, when I've got this figure, my scorecarding system says we need to be even shorter. Again, we don't know any of this until these figures come out. Let the market lead you. So all pound pairs, shorts, regardless of what they're doing at the moment. So, pound odd, we're going to get some strength coming through in the Australian dollar, I think. As we can see, it's already started. So that could easily continue to the downside. So although we're green, we're not really going anywhere, are we? Yeah. We're not really actually making any headway. Yes, we've had a couple of weeks where we've pushed up a little bit, but we're just back up to where we were in October. We're not going anywhere. So pound CAD, again, massive pushes to the upside after this huge drop. Oil has been coming down massively, and pound CAD has been taking full advantage of it. If oil is going to go up, this is going to come down. Again, if the US goes up, this is going to come down. There's lots of things, lots of factors this week which are going to drive it. But overall, fundamentally, right now, everything is a short and should probably remain a short on the pound. And obviously against this. And again, you know, this is what I say. The pound might be a short, might be a huge short, and the market is short it, but it's shorter CAD, which is why you see this. So you've always got to remember there's two participants in every Forex pair. Yeah. If you've got a massive bull stance or bear stance on one currency, that doesn't mean that that currency is coming down across the board. It means that it's coming down, it's weak. But if something is weaker, in this case the CAD, it will take advantage. So you've got always, you know, this is why the scorecarding system exists, where you make a plus and a minus in the institutions. They're plus and minus for different things. So if you're plus, 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 plus on the pound, and you're minus, 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 minus on the CAD can still go up against stuff, but it's not likely to go up against the pound, is it? So you've got to make a case for both individually. If one of them's doing massively well with interest rates and inflation, and the other one isn't, typically the one that isn't is going to lose. So although that's going up, think what's going to happen over the next 3 months with oil prices. One of the biggest factors in the CAD, inflation or deflation. And think about the pound. You know, we've been flatlining, no fiscal policy, absolutely dead in the water, and there's every potential for that to happen this week. So Swiss franc, can't see it doing anything but strengthening up. Again, look at what the pound has been doing against the Swiss franc. You know, it's just completely sideways at the moment, contracting, symmetrical triangle formation at the moment. We are just contracting, ready for the news to happen, and it's all going to kickstart the moves off this week. Pound yen, again, like to be shorting it. This is probably the best short out there at the moment for the yen, I think. Yeah, I mean, of all the pairs at the moment, this is probably the one I would say would want to be shorting the most, really. But pound New Zealand, completely sideways. New Zealand dollar should be starting to weaken off. So again, if that gets weak and that gets weak, if this becomes weaker, this is going up, isn't it? So it doesn't matter whether you've got the most bearish stance in the world on the pound. If the New Zealand dollar, everybody starts pulling the money out of New Zealand because it's actually going to be performing much worse, this is going to go up. So at the moment, difficult. Which is why, you know, this is partly why I'm looking at scorecarding at the moment myself, and getting and I'm looking at another company as well that does scorecarding, as potentially using their scorecarding system, so I don't have to do it. Basically, it's just me being lazy and rather paying someone else to do it for me. But just so I've got a complete fundamental bias and outlook easily, rather than having to do it all myself, because it does take a lot of time to put all this data together. So. But yeah, pound New Zealand moving forward, looking shorter on it. But again, we need to know what happens. You know, New Zealand's got its GDP figures coming out. Low might come out hugely dovish. We could have a double miss on it, which means that thing goes like that. Just don't know. We'll find out this week. Pound US dollar, can't see the pound beating the US dollar. Obviously, we've had a weak US dollar. And the US dollar has started to strengthen up ahead of FOMC. So we're now in a range. You've got a 50-50 shot based on what the news is going to do this week. Wait and see. New Zealand obviously has been on a run, as we know, very strong against everything. Again, think this is going to come to an end fairly soon. We're exhausted, absolutely exhausted. New Zealand CAD is just off the scale at the moment. This thing is just, you know, I put this in the Telegram group last week. You know, you look at from a strength perspective, the strongest moves we've had on this thing going back to 2018 or 2017, we're off the chart. You know, this thing, you talk about parabolic moves. It doesn't get any more parabolic than that. I haven't seen anything that go like that since Facebook and Google. You know, this thing's off the scale. But at the end of a parabolic move comes a correction. I mean, that's the only time it's been anywhere near there. But if you look at the other levels we've had after strong pushes, you know, there's even if it was to accumulate, you know, but I mean, it's due a correction, a large correction. This is the thing that's killing this particular pair. It's the Canadian dollar and the oil prices is just killing it. So you've had New Zealand massively outperforming its other Australasian partner, and doing very, very well from an economic standpoint. Coming out of COVID, everything's just going well, and this thing's just been having the worst time ever at the same time. You know, and that's why this is like it is. But this is starting to show signs of weakness. This is getting to the point where it's got potentially its main trade partner, the US dollar, this week to really pump it, and oil pricing to really help it along as well. So that will be the catalyst that causes that falling out of bed down the escalator shaft move. It just does not seem to be able to get started at the moment, obviously, as we know, as you can see. So look at the down candles on this. I mean, this thing, going back to the beginning of November, we've had 1, 2, 3, 4, 5, 7 down days in over, in a month and a half. 7 down days. This thing is utterly off the scale. And then look at and compare that to oil. Yeah, it's just the perfect storm, this one. But as I say, we are starting to show signs of weakness. So if you look at obviously New Zealand dollar CAD, we've had a couple of areas of accumulation starting to form, which is good. New Zealand dollar Swiss, we're completely sideways at the moment now, so it's starting to lose strength there. New Zealand dollar yen, we're pushing up against. We've got a weak yen at the present, but we've gone into an accumulation on that one as well. And New Zealand US, obviously, we've gone into a bit of an accumulation as well. We had the reversal alert, and now we're just sitting there flagging. So we will see, but it's still bullish, New Zealand. So it's really going to depend on its partners. So what happens with the CAD, the Swiss, the yen, and the US this week? Well, not so much the yen. Is going to depend what happens with the New Zealand dollar. So if they power up, New Zealand is coming down against them all. If they don't, New Zealand, I think, could well just continue to be a gradual slow grinder to the upside. There's nothing really to change its mind at the moment. It's just doing okay, isn't it, on everything? So I was just seeing what when's the next rate? I think it's February, the next rates on the New Zealand. Yeah. Yeah. Okay. I mean, the thing obviously you need to bear in mind with the New Zealand dollar is they're the first to get to the 4% threshold on interest rates. They're sitting at 4.25% on their interest rates, which is way higher than anybody else, and they got there way faster. And this is what I said. If you go back and watch videos of the live rooms from when we first started to increase these interest rates, I said back then, and it's just fact of life. The faster you increase your interest rates, the faster you get on top of inflation, the shorter your recession is. The more harmful it is, and it hurts. It can really hurt the housing market, it can really hurt the unemployment market, and really hurt the economy. But would you rather be in pain and in hospital for 1 month or a year? They chose the 1 month option, and this is where we are now. So, they've done well, but you will get to the point where they will start to plateau, and then everything else, as they start to catch up, will start to overtake, and that's what gives you the waves, obviously, in the market is as when the economies are out of sync. So we took it 7.3, aren't we, on the 7.2 on the inflation on that at the moment. So doing better, just doing better. They're just doing better. Good old New Zealand. But I think we're going to start over the next month to see this starting to wane. So I'd be less inclined to look at longs on it at the moment, but we'll see what happens with the rest of the data this week. So everything is all down to the data this week, isn't it? So US, again, very difficult to forecast anything on it. We are just sort of holding at the moment. Swissie's a little bit stronger. Yen, as we know, has been very strong. Everybody's scared of longing the US dollar yen at the moment. Just in case they get a slap on the wrist again. Every time we get near that 150, it's like, no. So, yeah, wouldn't want to be long in it. It could well easily go up, obviously, depending on what happens this week, but that's where I'd want to be jumping in the other way. The closer we get to that 150 level, the more the Japanese are going to stick their nose in and drop it again, which is fair enough. Yeah, so all of these, I'm slightly bullish. I think the FOMC is going to go the way we think it's going to go. I think the rates will come out at 4.5. It's what is said here that is going to really drive the US dollar long or short over the next couple of months, really. So the market will factor in what comes out of the press conference. So if this comes out as expected, the market has already factored that in. Yeah. If he now comes out and says, we anticipate 5.5% by spring, we know we've got 1.5% of increases to find over the next sort of 3 to 6 months, which could equate to 1/4 to 0.5% increases, which means that if that's going to continue to rise, they're expecting inflation to continue to rise. So we don't know until the press conference. The press conference is the most important part. Same with the SNB. When you get the SNB rates coming out, you'll find you'll get a lovely spike there and you'll get lots of movement. And then for the press conference, you'll have that or that happen, because the press conference, when that's over, we've got all the information we need now moving forward to decide whether we want to be long or short the US dollar over the next 4 to 6 weeks. That's when you get the movement happening after the press conference or during the press conference. So that's what we're really going to, when we're really going to find out what's going to go on. That's what we need to be paying attention to. And obviously, the US dollar, we've got the inflation coming out the day before the FOMC. So again, this data, right, whatever they're thinking today, i.e. Monday, tomorrow afternoon, they could be thinking something completely different, because the interest rate rises are data driven. This is the data. This is the main data, the CPI figures that they're looking at. So what these are will have a direct impact on what happens there. So, you know, it's impossible this week. And it's impossible this side of Christmas, really. As I say, this week's all about short term. Get in, get out, and get flat. And then start again second week of Jan. Because you're just going to get chopped about over the next week, really. Sorry, that's another. I'm just running a simulation on a demo account, well, on a just a robo account, just to basically testing the breaks, the break EA. This is running the NASDAQ test. NASDAQ test takes so long for some reason, because obviously on a tick level, NASDAQ, the average range on the NASDAQ is way bigger on a daily basis than all the other indices. So when you're doing back testing on the NASDAQ, it takes 3 times as long, 40 hours. I started this on Friday, 40 hours to run a 1-year back test on the NASDAQ. All the others are taking, you know, sort of 17, 20 hours. Just because there's so much tick data on the NASDAQ, because it just moves so fast. But it's decent results, decent profit factors again. I'm just trying to find a decent set file, really. Start with it's a small drawdown. What's that? Big trailers, big loss, big stop loss, big trailers, tiny drawdown, fast break even. Yeah. But I will. I'll just say, when I've got this is the final test. This is how long we got left? 8 hours. So by the end of the day, I will have all data for the first set of tests done for the new EA, which means I can get some set files out. So got that's complete, that's complete. This is partial at the moment. So all looking pretty good from a profit factor perspective. Dow's not quite as good. Dow's a lot harder to trade. But there's loads more testing I want to do. You know, this is amazing. Look at this, 1.96 profit factor off of this. I need to test this again and do some more tests and optimization on this, because this has got a lot of potential. Just taking one opening range break, and adding to it, but not taking second and third opening ranges. I need to test this on 5 minute. I need to test this on 15 minute. So I want to test this on different times as well. How long should we wait for the breaks? There's so much testing to do with it. It's just it's a never-ending thing, but you got to pick one. So after today, I will basically have enough, I think, to get it launched. We'll see. Right, that's all I've got for you today, really. It's just a case of hanging around, as the DAX is now doing. Look at that. Christmas trees. Red, green, red, green, red, green. Not going anywhere today, are we? It's just a shame we got taken out on that that high. So this is a good example, actually. The difference between the 5 minute opening range break and the 15 minute opening range break. There's your opening range for 5 minutes. There's your opening range high for 15 minutes. Obviously, that's 10 minute candle, the 15 minute candle. So if you'd have taken the 15 minute break, you would have got in there, but you wouldn't have taken that long. So I got stopped out on the long, and I got break evened on the short, pretty much. But the difference between taking the 5 minute and the 15 minute today was wouldn't have got that long on, so wouldn't have made that loss. But then on the days where it goes slam, 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 and moves down 3/4 of an ADR in the session, you wouldn't have got in the first two positions, would you? So your profit would have been only a third of what I would have made. Again, swings and roundabouts. And this is what the testing shows. It really, really does not make a lot of difference what you decide to do with these settings. Yeah, the difference between a 1.57 and a 1.39 is basically, you know, they all return money. They all return money. It's just some days you're going to win, some days you're going to lose. There's just nothing you can do about it. I could pore over that data for weeks and still come to the conclusion that I can't make a decision. So I'm just picking one. And like I say, you can pick whatever you like. And that's the beauty of this, isn't it? For a prop firm, so many combinations that actually make money. No one's ever going to take the same trades, are they? And also, you know, there's the manual exit. If I'd have this black line here that I had drawn in the chart, if I'd have actually paid attention to why that black line was there, I may well have taken profit when I saw this area being bought up, but I didn't. That's the point. I put futures shorts on, didn't I, as well? I haven't been paying attention to those. Oh, no, I didn't. Did I take a short? Could have sworn I took a trade. Did I not? Got no open positions. Not going anywhere, is it? It's just literally no point today. I don't think there's any point in doing anything today ahead of the news. So we've got Macron speaking this evening for the CAD. Apart from that, that's it today. So today, just probably that. If you get to range highs and lows, so with everything today, I think probably the best thing you can do, regardless of what you want to trade, is just watch yesterday's highs and lows. So look at the highs and the lows. It's down there. Sorry. ADRs. If we get any pushes down towards ADRs, just mean reversions today. I mean, you look at the Asian range. There's your Asian range, and there's your London range. You know, there's not really anything happening, is there? So, if we can find some attempts to take liquidity at highs and lows, I think that's probably the best plays today if you want to get into anything. M5 really, because M15 reversal alerts, you're probably going to find, this has got a drawing problem again. Data's awful in this platform for some reason. Just doesn't load in properly. So yeah, M15 reversal alerts are probably going to be a bit slow today. So you want to be looking really M5s. See, look, it just doesn't redraw. It just doesn't load the data in properly, this one, for some reason. So just got a reverse alert there, but I would be more inclined to take it here. You're going to find there's a lot of limit orders sitting at the highs and the lows ready to trigger today, because they're not going to want to sort of break out in any direction, I don't think. And I don't think they're going to want, there's not really a lot of liquidity anywhere to hunt, because Friday was such a dull range bound day. You'd have to look at the previous day's highs, and to get to any of those previous days' highs and lows, you've got to be going outside of ADR. So again, ADR reversals today would be good if you can get there, because it's unlikely they're going to be able to sustain a move out of ADR today. There's just not going to be, enough to warrant it, I don't think. Euro CAD, there you go, prime example. So we just literally ran straight into yesterday's high. All the limit orders have triggered. So getting short when you get a reversal alert, and just trade it back down into the range. Really, it's all you can do today. It's just going to be one of those days, I think. Today was the only day of the week I was going to trade. Typical. Yeah, I don't think it's going to be particularly fun today. Obviously, you got the Open, and US Open will still be busy. If you look at the US indices, and again, this is what I'll be doing in the futures this afternoon. I'll be looking at the highs and lows, really. So just watching that area for shorts. If you think of it from a volume profile perspective, that's going to be your value area highs and lows. I'll just be trading out of those areas, trying to get some mean reversion trades on, if we can get to them, basically. Yesterday's lows a bit, because that's a dodgy candle, that. Where's that line? So far down there. It's weird. Yeah, I mean, there's such a long way to go to the highs. It's a lot easier to get down to the lows. There's going to be liquidity sitting down there. So if they push down to the lows this morning, or rather at the New York Open, I'll be looking for mean reversion down there. But there's no interest in the Globex session, as we can see. The London Globex session is tighter than Asia. Just not doing anything today. I also quit for this year, banked my 4.6% this month. Cool. Don't want to risk it. No. News trading. Can make some serious money news trading this week. If you can get it, it's literally a coin toss. You could do that. That's a good way to trade the news. Just wait until the news is about to come up, and at 6:30 tomorrow morning, flip a coin, heads or tails, and place a pending order. It's either going to work or it's not, isn't it? It's a good way. People sell courses in news trading. It's amazing. People sell courses in how to trade the news. Well, you get in and it either goes your way really fast or it goes against you really fast. You either get slipped and lose more than you were expecting to, or you make an absolute killing. How can you do a course on it? It goes up or down really fast. I don't really see how you trade courses. And then people try and I suppose, yeah, it doesn't matter, does it? It doesn't matter what your bias is right now. Look, whatever your bias on the US dollar is right now, and whatever your bias is at 1 p.m. tomorrow afternoon, it's got nothing to do with what that number comes out as, is it? If I'm saying, I definitely think we're going to get better CPI figures, we're going to go long on the US dollar, it doesn't matter. Whether that comes out red or green, it's going to go wherever the hell it wants. You can't teach a strategy around it. The strategy for news trading is a straddle trade. Wrong account again. That's the strategy. Straddle it. Yeah. You don't know where it's going. Well, one of two things is going to happen, isn't it? It's going to go, and this is what we see. It just goes crazy, or it goes crazy. Yeah. I.e., it takes you short and then stops you out and takes you long, which means you lose that. Exactly like me this morning. I went long, lost, go short. Or it's going to do that. And you're going to get taken out of both positions and lose both. So you think about it with news, it's very, very simple, isn't it? There's literally three outcomes. Nothing, explosive move in one direction, whipsaw. Those are the only three things that could possibly happen at the news. There is no other option. You've got a 1 in 3 chance of one of those things happening. So simple. But you go long there, you get entered there because you get slipped because there's no liquidity available when it moves. Some people posted the Telegram group that got gap candles. There's a whacking great gap and then a big bullish candle. It's just because your broker just didn't have any liquidity in here. Market liquidity was there, but your broker didn't have it. So yeah, that's this week's opportunities. Flip a coin. Good luck. I should be doing the same. Yeah, we'll see what happens. If you need anything, I'll be in the Telegram group. But I'm not going to trade any of this live, I don't think. There's just too much of it, isn't there? I think there's too much of it to trade live this week. But I will be doing very much the same sort of thing and just seeing if I can get positions grabbed and milk grand here, grand there sort of thing. Lose 300 here, 500 there. That's really all you can do. See what happens. But it's going to be an exciting week. Has anybody got anything else they want to look at? Or any other questions about anything in particular? One other test I'm going to do on the EA as well is pre-market range tests as well, which is another thing that it's another strategy I used to trade, which I'll quickly explain, and I need to run the tests on, but 10 o'clock. So that's the open of Frankfurt. So where you get this little price action before the open, using this as the opening range breakout. So it's the pre-market trading ahead of the open. So using that as a breakout level. This is very similar to, this is kind of what they call the London breakout strategy, if you like, except it doesn't work. But it will work on indices because we've got volume and volatility at a specific time. But on the London breakout strategy, you never know when it's going to go. The London breakout strategy is basically you just straddle the Asian range and wait for London to break out. Or you wait for London to false breakout and then you do that. There's a couple of London breakout strategies, but it's kind of a bit similar to that. So I'm going to test that as well. That's the next test I'm going to do, which I think is another good opportunity for the range breakout EA to exploit, and obviously just see what the best sort of way to trade that is. It's another good way. Andy, whipsaw week, I think. Hard to make money. Yeah, it's going to be difficult this week, but it's one of those things this week with the fundamentals. We are going to get some directional bias this week, at least. We're going to know what all the figures are. Again, this company that I'm looking at that provides all the fundamental data. One of the guys in the Telegram group, Alex, put me onto them. They basically do what I do in here, they and what the banks do basically. So the banks obviously have a scorecarding system, and they basically take each of these, and depending on what the outcome is, they will give it a score, a plus or a minus, which is either bullish or bearish for that particular currency. And then you give a currency after all the news is taken into account. So CPI, unemployment, interest rates, GDP, they also take into account, which is kind of why I like it, is COT bias, so the institutional positioning. They also do retail sentiment, which I don't really think is much use and trend, but they give it basically a plus and a minus. So the odd might come out at +4, and then you do the same scorecarding system on the pound, for example, and the pound will come out as a -3. So you know that you want to be buying the Aussie as a medium to strong buy, and the pound is a medium to strong sell. So you don't want to do anything with the Aussie dollar pound apart from be in a sell against it. Or pound odd, you want to be selling pound odd. So from a position trading perspective, that's kind of the fundamental bias. And I used to use, as you know, COT report. I used to use COT figures for my directional bias, and the COT figures basically are, in a sense, the institutional moving averages. So the institutional moving averages a lot of the time line up with COT. So these kind of do that. But the trouble with COT is it's delayed data. You're always looking at Tuesday's data on a Friday. So by the time you start using it on the Monday, you're a week behind. So where they were positioned last Tuesday isn't actually as important as where they're positioned right now, because where they're positioned right now is where they're going to move the market, not where they were last week. So COT data is a little bit difficult to use as it's delayed, but obviously all the institutions factor in all of the other stuff like the interest rates and everything. So my plan was to put a spreadsheet together, which I started with all of that data in, and then I stumbled across this company, which do it all for me for $600. So I'll pay them, I think. But I need to backtest their data and just see. I just need to spend a little bit of time on their platform and figure out really whether it has a beneficial use or not. So that's kind of what I want to use moving forward. So from a position trading perspective, we will have a bias set out via fundamentals. If that bias also lines up with institutional moving averages, there's your direction. Yeah, so I'm in their system at the moment. So for example, at the moment, they're saying US dollar CAD is a strong buy, which I tend to agree with. So it's a strong buy. We are above the institutional moving averages. So financial, or rather fundamental analysis points to a long. COT alignment points to a long. Moving averages point to a long. Therefore, I don't want to be doing anything but taking longs. So what I'll be doing is looking for 4-hour pullbacks, 1-hour pullbacks, and ADR low hits. So the EA will be set up on US dollar CAD, literally just to take 1-hour, 4-hour RSI extensions and ADR hits to the upside, to the downside, which is kind of what I do anyway. It's just having that data prepared for you is nice, because getting it all together is a ball ache. Because what you've got to do basically is every time one of these is released, you've got to basically put this into a spreadsheet, do a recalculation, and their system does all of that. It's kind of like having a bank, because they're only doing what the banks do. They just don't do it in a detail. You know, the banks have got 20 to 30 different scorecarding elements, whereas they're using sort of 8, 10. So it's a dumbed down version, but it's all the important, what I think is the most important stuff, which is the main data you see this week. Everything this week is going to be changing the financial fundamental outlook. So, I'll let you know. I'll get on with that. That's something I'm looking to use new year, I think, for position trading. But I need to spend some time and look at it in detail. And also, the other good thing about it is it gives you neutral biases. So things like the pound Swiss at the moment are a neutral. It's a neutral bias. So it's a neutral bias. So there's no directional bias. So if you've got something that's got a neutral bias, because at the moment this is weak and that is weak because of certain positioning and fundamentals, you know that all you want to be doing is taking RSI extensions up or down. Doesn't matter, does it? You can take either. Until when are you going to be running the live room this year? I think this week. Yeah, I haven't really thought about it, to be honest. I mean, I'm not trading next week. So yeah, I'll probably finish up on Friday and then take next week off. And then obviously I'll be back on January the 11th or January the 3rd. Probably January the 3rd. But this week is it's a little bit volatile, I find, that week. You've still got a lot of slippage because a lot of people still aren't back. So you tend to get, mind you, it's non-farm payroll week as well. Yeah, we want to be back that week. This is the week it's going to kick off. This week you'll find is probably fairly quiet. So I'll come back on the 3rd, I think. But I'll be spending the whole time. I'll still be around the whole time. I'll still be doing research. I never stop doing stuff. It's just there's no point much in trading unless there's news events which can kick it off. But as you've seen from this morning, you know, the danger is you just get whipsawed like this. So you literally, all you're doing is, this is probably going to come back down into there. You got stopped out in that position as well. That's not a good start, is it, for the funded account? $800 loss on day one. It's one trade. One trade to get that back. So yeah, that's what I'll be doing. Right, I will leave it there. Good luck this week. I'll be back tomorrow morning, 7:50, obviously, as usual. Yeah, good luck this week. It's going to be a pretty busy one. So nothing else today. Pretty much sideways rubbish today, I think. And then obviously tomorrow morning, be aware of any pound pairs you've got on. But CPI is the main thing tomorrow morning. Tomorrow afternoon, 1:30. Unless you want to do I mean, I can change the live rooms to be around the news events, I guess. But you know, it's which ones you pick. I'm not here Wednesday afternoon, Wednesday evening for I won't be here for FOMC anyway. I can't trade it anyway, but we could adjust them. But you know, I'm not going to do a 7 o'clock live room. CPI figures. Kind of just want to do our own thing this week. Pray. It's mostly what people have been doing this week. This is the trouble trading as well. You don't realize until you've been doing it for quite a few years that you don't get paid in December, and you quite often don't get paid in January either. So you're actually only working 10 months a year, and you usually take a month of that off in holidays. So actually, you only get 9 months a year to actually work, because December's a whitewash most of the time. It's either a massive, massive win or it's a massive loss. I had a massive December last year, but this year I'm having a nightmare. So you know, swings and roundabouts, isn't it? But you can never tell what's going to happen. Certainly not getting our Santa rally, are we? That is not happening. We know that for a fact. Santa this year has not turned up, but he could be here on Wednesday. You never know. We still have got 2 weeks to trade, so they could be here. Could be here, couldn't he? Could turn up late. We'll see. New Zealand dollar CAD's just testing highs, so there's one potentially for a trade. New Zealand dollar CAD. It's just pushing up into yesterday's highs. Potentially is a short there. That's making new highs as well. So again, another new high. New Zealand dollar CAD, still going. From a seasonal standpoint, the Santa rally starts on the 10th trading day of December. Does it? Didn't know there was a date. I mean, it's just the 10th trading day. That's today, isn't it? That's at 1, 2, 3, 4, 5, 6, 7. This is 8th. Yeah, well, that's Wednesday when the rates are announced. I've no idea. The Santa rally basically is all I've ever looked at the Santa rally is as from a perspective of is December is an up month, and we tend to rally into Christmas. But I've no idea whether there's a particular day it starts or what. But I mean, I don't know. Never really looked into it. The idea of the Santa rally, the best way to trade the Santa rally, and this is how I've always done it in the past, is on December the 1st you take a buy and you close it out Christmas Eve. And 73% of the years you do that, you will make a profit. That's kind of the way I've ever traded it. And obviously, historically, yeah, I mean, if you just basically bought every low, if you bought every down candle in December, you'd make a profit. There's lots of ways to trade it, but I didn't know there was a particular day it starts. It's December. I don't know when. But if it does start on the 10th trading day, that is OMC day. Which means if we're going to get a Santa rally this year, what that means is all the FOMC figures are going to be negative for the US dollar. The US dollar is going to collapse through the floor, because to make the Santa rally happen, the US dollar has to be weak. So what you're forecasting, if that is the case, is a weak US dollar on Wednesday. We will see. Who knows? Could go either way. Haven't got a clue. Get a clue tomorrow. We will get a clue tomorrow. But we'll see. Okay, I'll leave it there today. If you need anything, come in the Telegram group. I will be there. I will be working on the EA today and the strategy document and the documentation, because I can't release anything until I've got all that done, because people need to know how to use it. So I'll try and get that out today or tomorrow and launched. And then, yeah, we'll see what happens this week. All right, so hopefully it's a profitable one. And I will be back tomorrow morning, 7:50, same time. I will see you then.